Comprised of the largest 50 A-share companies, the FTSE China A50 Index is one of the most recognized China A-share market indices in the international investor community. Since its launch, the FTSE China A50 Index has evolved alongside with market development. The index constituents are subject to foreign ownership limits and northbound stock connect trading eligibility. Together with sanctioned stock treatment, the index is carefully designed to enhance investability among international investors. Despite the methodology evolution, one aspect stays intact: its simplicity. The FTSE China A50 Index continues to follow a simple, transparent, well-understood free-float market cap-adjusted construction methodology, a gold standard for indices with a modest number of constituents, which results in a highly predictable composition. Meanwhile, while the 50 constituents in the index represent less than 1% of today's A-shares market by stock count, they represent a third of the market on a full market capitalization basis. This means the FTSE China A50 Index matters when it comes to market relevancy. In fact, because these are some of the largest and most important companies in China, the index composition evolves alongside with China's policy. For example, exposure in companies that contribute to carbon reduction has increased substantially since China announced its march towards carbon neutrality in 2020. FTSE China A50 Index's simplicity and relevancy nature has propelled the index to becoming one of the most popular China A-share index choice among ETF issuers globally. Today, the index is tracked by nearly $5 billion in assets across multiple ETFs domiciled outside of China. Together with the hugely fluid futures associated with the index, the established ecosystem is precisely what makes the FTSE China A50 Index so attractive for today's investors globally.